this is Dan Smith of DPS Legal Counsel, and welcome to today's video and podcast. Today I want to talk about the Paycheck Protection Program. Again, I spoke about this a while back, but there's new information to provide. There's been a new development to talk to you about, and that is this. Today is Wednesday, April the 15th. Yesterday, Tuesday, April the 14th, the SBA, the Small Business Administration, issued a new Interim Final Rule. I love the terminology that the government uses, Interim Final Rule. And so what this new Interim Final Rule talks about and provides guidance on is applies to self-employed individuals who report net self-employment income on a Schedule C attached to their 1040 income tax return. So what I want to do today is walk through an example of how this new guidance works if you are a self-employed person who reports your self-employment income on a Schedule C attached to your 1040, and if you have no employees. Essentially, you are a sole proprietor, totally self-employed. How do you report? What are you eligible for under the Paycheck Protection Program, loan program, and how can you use it, and how does the forgiveness work with respect to any loan you might receive from your bank under this program? So let's just kind of walk through how this new guidance works with an example. Let's take an example of someone who has been in operation and ran a business all of last year, 2019, totally self-employed with no employees, just net self-employment income that this person reported or would report on a Schedule C of the 1040, the income tax return. Now, what this new guidance says is that if that's the case, then the amount that you would be eligible for to borrow under the Paycheck Protection Program is 2.5 times your average monthly payroll cost, which is determined in the case of a totally self-employed person with no employees, their net self-employment income for 2019 divided by 12 to get an average monthly amount. So in simple terms, your average monthly net self-employment income for 2019 times 2.5 is the amount that you're eligible to borrow under the Paycheck Protection Program. Now, what if you have not yet filed your 2019 1040? Because of the COVID-19 pandemic and the lockdowns and all the changes that we're living through right now, the Internal Revenue Service has delayed the deadline for filing income tax returns this year from April the 15th, which is today, to July the 15th. And so it may be that many people have not yet filed their 2019 income tax returns. But the guidance that came out from the SBA yesterday requires that you either provide as documentation to prove what your net self-employment income was for 2019. You either have to provide a copy of your filed 2019 income tax return showing on your Schedule C what your net self-employment income is on line 31, or you have to go ahead and prepare your Schedule C for 2019 for your 2019 1040. So even if you have not yet filed your return and are not planning to file right now, since the deadline has not yet come, you still have to, as part of the documentation process to get a Paycheck Protection Program loan now, based on the new guidance that came out yesterday, you still have to go ahead and prepare your 2019 Schedule C, so that you can demonstrate to your bank and to the SBA what your net self-employment income was for 2019. So you take that number that appears on this 2019 Schedule C, whether it's part of your filed return or it's part of a Schedule C that you prepare now, even though you are not yet filing your return, you take that amount on your Schedule C, your net self-employment income for 2019, you divide it by 12, multiply it by 2.5, and that is the amount that you're eligible to borrow. With this one caveat, let's say that your net self-employment income for 2019 is greater than $100,000. If that's the case, you are limited under this program to only taking into account up to $100,000 in net self-employment income for 2019. So let's say you, for example, your net self-employment income for 2019 was $200,000. Well, unfortunately, all you can take into account is the first $100,000. So you would take $100,000 instead of $200,000. You take $100,000, divide it by 12, and multiply by 2.5. If your net self-employment income was less than $100,000 for 2019, you take that amount, divide it by 12, and multiply by 2.5. So let's just take an example of someone whose net self-employment income was greater than $100,000 during 2019. The maximum amount that person can borrow under the Paycheck Protection Program is $100,000 divided by 12, which is $8,333.33, times 2.5, which works out to be $20,833.33. That would be the maximum amount that you could borrow under the Paycheck Protection Program. Now, you may not want to borrow the full amount that you're eligible to borrow, because you have to use the monies that you borrow for certain specified uses under the program. You have to use it only for, in the case of a totally self-employed person, replacement for the compensation that they would earn as a self-employed person, rent, business rent, interest on business mortgages, and utilities. Now, you have to use 75% of what you borrow for payroll costs, which would be your, in this case, net self-employment income for the self-employed person with no employees. So the question then arises: well, what if your net self-employment income, looking at a purely monthly basis, doesn't really is not any different than what would have been 100,000 divided by 12. So since that's the max you can borrow and the max you can replace, let's say that your net self-employment income over the next couple of months is more than $8,333.33 per month, or it's less during this 2-month period, but it increases later in the year, and your average for the year is still greater than $8,333.33 per month. Is that a problem? Well, the Interim Final Rule goes into great detail explaining how this works with self-employed persons who have no employees. So what it would be almost unworkable to have to get into every person's situation, whether the timing of their money comes in a certain month, or they have less money at the end of the year, or they have more money at the end of the year. It would almost get to be too difficult. And so what the government has done is just picked a method for determining how much you can pay yourself if you're self-employed under this program, which is, and again, you have to, this money has to be dispersed by you for these business uses within 8 weeks after you receive your loan. And so during that 8-week period, you have to use it for one of these uses. So if you get your money, let's say you borrow your money and you want to use it to pay yourself net self-employment income during that 8-week period. Well, the new rule says that the government will forgive a number, which is based on a formula, which is whatever your net self-employment income was for 2019, capped at $100,000. Okay, so let's just say with a person who has a net self-employment income of in 2019 of greater than $100,000, the cap is $100,000. You multiply that number times a fraction, with the numerator being 8. Because we're talking about 8 weeks, and the denominator being 52, the number of weeks in a year. So if you multiply 100,000 times 8 divided by 52, that's the amount you can pay yourself during this 8-week period after you get your loan, and have that amount forgiven, not treated as a loan. And so that number works out to be $15,384 and some change. So now if your net self-employment income for 2019 was less than $100,000, then you would multiply. You would determine what that amount is based on your Schedule C that you had to prepare for 2019. You would multiply that times a fraction, with 8 as the numerator and 52 as the denominator, and that's the amount that can be forgiven that you disperse within 8 weeks after you get your loan. So going back to our example, let's say that you have someone whose net self-employment income for 2019 was either equal to or greater than $100,000. That means that that person can borrow under this program from their bank, and they can borrow up to, they could borrow obviously $20,833.33, because that is based on the formula, that's the amount they're eligible for. But the amount that can be forgiven for a use for replacing their compensation would be capped at $15,384.33. The other amounts, which would be essentially approximately $5,500, would have to be used for other permitted uses, business, mortgage interest, rent, and utilities, in order for it, during that 8-week period, in order for it to be forgiven. Now, if it looks like that's going to be more than you would be able to spend on documented, verified expenses of those types during that 8-week period, then whatever the difference is that you can't use for those designated expenses, you're going to have an overage. And so that amount is going to not be forgiven. You're going to have to pay it back with interest. The interest is 1% per annum. And so you may want to, when you apply for your loan, only apply for an amount that you know that would be forgivable, which would be, again, with our example, if you have a net self-employment income of over $100,000 last year, 2019, you can have forgiven $15,384.33. Add to that whatever rent and mortgage interest, not the principal, and utilities that you're going to be able to pay and document your payment within the 8-week period after that you get the loan. Add those numbers together, and that's the amount that you can get forgiven. So you may not want to apply for that full amount that you could apply for, which is the $20,833.33. Another thing you might want to take into account is that when you do seek forgiveness, you're going to have to document the expenses that you paid during the 8-week period. You're going to have to, and according to the Interim Final Rule, you'll have to send in maybe a copy of your lease agreement. You'll have to send in a copy of your utility statements, anything like that you base your payment on these compensation expenses, you're going to have to prove to the government that you spent it for those expenses during the 8-week period. And so if you do decide to seek just enough to replace your self-employment income up to $100,000 for prorated for an 8-week period, which again would be $15,384 and 33 cents. The government will already have the documentation on that because you will have already filed as part of your application your 2019 Form Schedule C. Now, it may be that the government will come out later and say you have to send in your final tax return if you don't provide if you haven't filed by the time you make your application for your loan. That's possible. And so, your Schedule C should match, that you apply with, should match the Schedule C that's on your final return. I can foresee some issues where someone makes a mistake in making their calculation while they're applying for the loan and then correct it when they file their tax return, and there may be a difference between what was included with the application and what's included on your final 1040. I don't know how that will work. The government hasn't really addressed that particular question. But if you do end up having self-employment income of more than $100,000 in 2020, it really should not make any difference, because the amount that you borrowed, if you only borrow your pro rata share of that $100,000 for the 8-week period, $15,384 and 33 cents, it's going to be the same whether or not your self-employment income for 2020 is $200,000 or $300,000. It won't make any difference because you're capped at the $100,000 level. What would make a difference is if you prepare Schedule C and based on 2019, and it turns out later that you have enough expenses and you miscalculated your income level so that your net self-employment income for 2019 is actually less than $100,000. Then if you had borrowed at based on $100,000 net self-employment income for 2019, there would be an issue. And that's likely to come up with some applicants for this program, and I guess we'll see what the government does in those cases. So I would be conservative and cautious in how much you apply for based on your 2019 self-employment income if you haven't yet filed your 2019 Form 1040. All right, that is a lot of information. I hope it's helpful. If you have any questions, please feel free to get in touch. And until next time, we'll see you on our daily episodes of business issues for entrepreneurs and for healthcare professionals, and for our podcast, Legal Scrubs, Business is More Exciting Than Any Game, and Einstein's Theory of Taxability. Thanks. We'll see you next time.